Hello everyone. Very good evening to all of you. How are you all? I hope everyone is doing great. First, let me know, is the voice audible or not? Is the voice audible? Fully. Is the voice audible? Everyone please respond. Then I will come to the doubt discussion one by one. I will take each and every doubt. Yes sir, audible. Okay. So let us take the first doubt of Manikanta. Good evening Manikanta. How are you? As per Ind AS 16, why the net profit from the sale of item produced during the testing will be deducted from the cost of PP even though the sale profit after the intended use? Why they made carve out in Ind AS 16? Now just try to understand what Ind AS 16 says, that if there is any testing done. So why we do testing? Testing is done to find out whether the asset is in working condition. Means such expenses has been incurred to bring the asset for its intended use. To bring the asset means to make the asset ready for its intended use. Means can I say this is the expenditure incurred to bring the asset in the manner so that they become operating, correct? Now so that is the expenditure done before the asset is ready for use. So of course the testing cost will be capitalized. Now during the testing period, if some unit has been produced, so what in India 16, that a sale proceed of the unit produced during the testing period will be deducted from the testing cost, and that amount will be capitalized, correct? Now recently there is one amendment in international accounting standard. They say that any sale proceed will be transferred to profit and loss account. So India 16 has given one clarification that they will not transfer, means as per India 16 will not transfer that the sale proceed to the profit and loss account. It will be deducted from the cost price of PP only. So this become a carve out, and which is correct also, because the testing cost has been incurred to make the asset ready for use, and during the testing period some unit has been produced, which can be the sale proceed of that can be deducted from what the testing cost, and the net amount will be capitalized. Got this point? I hope Manikanta this is clear. Now next question is stock market. Stock market, what is your name? Great name. Stock market. You rule stock market. अरे नाम तो अपना रखो रे. Correct? Yes sir. So if the question says bonus share issued and the journal entry is passed, so its effect in Sona will be reduced from the closing equity share capital, and the same amount will be shown in the opening share capital, right? I mean that there should be no difference in between opening and closing. Am I right, sir? 100% correct. But let me give you some knowledge about the bonus shares. Okay, let me take one example so that you can understand. Suppose this is 31st March 2023 and this is 31st March 2024. Understood? Yes sir. And we have an equity share capital of 1 lakh and 1 lakh, and we have a general reserve of 1 lakh let us make it 2 lakh and 2,50,000, and we have a retained earning of 1 lakh and 1,50,000. Suppose this information has been given 1,50,000. Now suppose on 1/4/2023 H Limited acquired 60% shares of S Limited. So this is the information of S Limited. Okay, correct. Now on 31st March 2024, S Limited issued bonus shares in the ratio 1:1 and no journal entry has been made. This is the first point, correct? Yes sir. So can you say what will be the effect of this? So first we'll prepare analysis of profit. So we'll take retained earning and general reserve. So what is the closing balance given? Closing balance I have given 2,50,000 and 1,50,000. Oh sorry, ulta kar diya. It is 1,50,000 and 2,50,000. Then we'll take opening balance. Opening balance has been given how much? That is, it is 1 lakh and 2 lakh. So 1 lakh and 2 lakh. So can you say this become profit, and that is how much? 50,000 and 50,000. And because journal entry of bonus share has not been made, so can you say no journal entry has been made, so no adjustment is required. Correct. Now means there is no need to add back because till now no journal entry of bonus share is made. Even though bonus share journal entry has been made, what is journal entry? Reserve and surplus account debit to equity share capital. Can you say whenever we are passing this journal entry, the net asset of the subsidiary company remains same, whether the entry has been done during pre-acquisition period or post-acquisition period, the net asset on that particular date will remain same whenever you are declaring bonus shares. So can you say the bonus shares will not affect the net asset, and the objective of this particular working unit is to find out the net asset on the date of acquisition. Correct. Now so can you say we should do plus bonus shares but ignore it because no journal entry has been made. So this become profit 50,000 and 50,000. This will be allocated to pre-acquisition profit and post-acquisition profit. Because the shares were acquired at the beginning of the year, the entire profit will become what? Post-acquisition profit. This understood? Now we'll prepare SONA. Statement of net asset. So we write down date of acquisition, date of consolidation, and in post we write down retained earning and general reserve. Correct. But what is the equity share capital given? So equity share capital, can you say whatever equity share capital has been given, that is also before bonus shares. Understood? Bonus shares. So it will be 1 lakh and 1 lakh. So can you say because the bonus share will not affect the net asset on that particular date, so it should be totally ignored from this working note, because before bonus years and after bonus year the net asset remains same. So even though you are passing any journal entry, then also the net asset will remain same. So even though if you are ignoring the entire effect of bonus year, the net asset remain same. I hope you are understanding. So whenever there is no journal entry of bonus years, I will say ignore the entire adjustment, ignore the entire transaction for the adjustment in AOP and SONA. Understood this point? Correct. Then we write down in this retained earning. To retain earning, what is the opening balance? Opening balance retained earning is 1 lakh, and there is no pre-acquisition profit. Post acquisition is how much? 50,000. Total become how much? 1,50,000. Then we write down general reserve. Opening balance how much? Opening balance is how much? 2 lakh, and there is no pre-acquisition profit, and the post-acquisition profit is 50,000, and it become 2,50,000. Total is how much? Total become how much? 2 lakh, 3 lakh, 4 lakh. This become 4 lakh. This become 50,000. This become 50,000. This become 5 lakh. Understood? So this become the net asset on the date of acquisition, and then you can do subsequent working note. I hope you have understood this. Now what I will do to explain your doubt, I will just now pass the journal entry. You will automatically understand the effect. They can say even though you are not passing journal entry or you are passing journal entry, the effect should remain same. means the net asset on the date of acquisition, date of consolidation should remain same. So I will change the example now only for your better understanding. For your better understanding, same example. Equity share capital will be 1 lakh, 1:1. So equity share capital will now become 2 lakh because it will increase by 1 lakh bonus shares. General reserve, initially it was how much? Opening balance was how much? 2 lakh. Understood? 2 lakh. Understood. And 50,000 has been added. 50,000 has been added. It was the transfer from profit and retained earning. So some profit has been transferred. So 2 lakh. Can I say plus 50,000 minus what? 1 lakh. So it will become 1,50,000. 1,50,000. The closing balance will become 1,50,000. Understood? Yes, sir. And retained earning will remain same. Retained earning is what? 1 lakh and 1,50,000. And now the same adjustment, bonus shares was declared, but the journal entry has been made. So in this case, how you will prepare AOP? Batao. Now AOP will be what? We will take what? Retained earning, journal reserve, closing balance. Closing balance is how much? 1,50,000. Sorry. Closing balance is 1,50,000. General reserve also 1,50,000. Opening balance is how much? It is 1 lakh. And now it is 2 lakh. So it is coming how much? This will be 50,000. And you can see this is negative 50,000. Negative 50,000. Now what you will do? You will do plus bonus shares. Why? Because the journal entry has been done. So you need to nullify it. You need to add bonus shares. And of course, it is understood that journal entry has been done from journal reserve because journal reserve become negative. Correct? That information will be given the question. So you'll add 1 lakh. You'll add 1 lakh. And you can see now the same profit is coming 50,000 and 50,000. 50,000 and 50,000. Understood? Now you'll prepare SONA. Means of course here pre and post we remain same as per previous solution, 50,000 and 50,000. Now we'll come to SONA. SONA. We write on date of acquisition, date of consolidation, we write on post, here write on retained earning, journal reserve, and now you can see equity share capital, how much given on the date of consolidation, means closing balance how much? 2 lakh. Are you getting? But can I say because you have already added bonus shares, means you have nullified that effect. You have nullified that effect. So can I say the closing balance should be how much? 2 lakh minus 1 lakh, means it should be 1 lakh before bonus shares, and this will be also 1 lakh. This will be also 1 lakh. Then retained earning. But what is the opening balance? Opening balance is 1,50,000. Post acquisition profit is 50,000. So this become how much? 2 lakh. And general reserve opening balance how much? General reserve opening balance is 2 lakh. Correct? And what is the post acquisition profit? 50,000. Got this point? Are you able to understand? So opening balance is 2 lakh. Post acquisition profit 50,000. And this will now become how much? 2 lakh 50,000. Are you getting what I'm saying? I'm coming to your point. Give me, just try to understand. That is what? Okay. So opening balance is how much? For general reserve, it is 2 lakh. Yes, sir. Correct. ये थोड़ा सा मिस्टेक हो गया. Return earning is what? Opening balance is 1 lakh. 1 lakh. And this was 1,50,000. Understood? And you can see now for general reserve the opening balance is 2 lakh. and the post acquisition profit is 50,000. So total will come 2,50,000. So ultimately your net asset on the date of consolidation remains same. You can see this is coming how much? 4 lakh on the date of acquisition, 50,000 post, 50,000 post, and this is coming how much? 5 lakh only. It is coming what? 5 lakh only. So your, even though journal entry has been made or journal entry has not been made, your effect remains same. So what we have done, you can see I have taken journal reserve 2,50,000, or you can take this as 2 lakh and you can take what? Journal reserve as what? You can take 2 lakh and journal reserve as 1,50,000. Ultimately the effect will remain same only. I hope you are understanding. So this I just want to say that you need to remove bonus shares from the closing equity share capital, and the closing equity share capital and opening equity share capital will remain same. I hope now you have understood. Bolo, stock market, whether your doubt is over or not. Stock market, whether your doubt is over or not. Batao. First ask me this point. Thanks a lot, totally understood. Okay sir. Now coming to next point of Kirti. Sir, India is 37 while calculating average effective tax rate. Average effective tax rate. If there is a carry forward of losses along with DTA created, it is India's 34, Nalayak, not India's 37. I think your doubt is India's 34. While calculating average effective tax rate, if there is a carry forward of losses along with DTA created in previous year, how to calculate tax rate? Then DTA, if the DTA is already created in previous year, so can you see in this year you have already used the tax losses. So in this year whatever DTA you have created in previous year, that will be reversed. Means in this year DTA will be reversed. Understood? When DTA reverse, so what journal entry you are doing? DTA reversal. What journal entry you are doing? Batao. Correct? So it will be DTA expense to DTA. So of course that will be some deferred tax expense in this year. So that deferred tax expense will be considered to calculate effective tax rate. I hope you have understood. But till now that type of question has not been asked in what exam, and they have not given this type of question ICAI study matter. Have you understood, Kirti, your doubt? So if DTA has been created last year, as so DTA will be reversed in this current year if the tax losses has been used. Tax losses has been used. I have informed this point with one question in my class also. Kirti, are you my student? Bolo. Your doubt is over. I need to take one example. Bolo. Kirti. Stock market. 1 second. Also, sir, if in question goodwill is given in SFS, which may be previous business combination, then it should be reduced in SONA, right? Of course, 100%. From my point of view, SONA means when you calculate INA, INA means excluding goodwill. So can I say this is nothing but when you are saying this is what? Total asset minus total liability. So total asset include now goodwill. So this is not INA. So INA, to calculate INA, we should minus that goodwill. So any goodwill is given in the balance sheet, we should be deducted to find out the fair value of INA. That is 100% correct. Whatever you are saying, that is correct. I think you are requiring clarification. Understood? So I have taken one question where I have deducted goodwill from the INA only. Understood? Have you understood stock market? Yes, sir. What Kirti is saying, once can you show the calculation with the amount? Let me take one question. So we are taking one question of India's 34. India's 34. Better I will take a question of what? ICAI study metric. Come to India's 34. One question I will take. So I can take this question. ABC Limited present interim financial report on 1/4/2001, ABC Limited has carried forward losses of 600 lakh for income tax purpose for which DTA has not been recognized. So last year DTA was not recognized. So this year DTA will not be reversed. ABC Limited earned 900 lakh in each quarter on 30th June, 30th September, 31st 12, 31st March, excluding carry forward losses. Income tax rate is expected to be 40%. Calculate the amount of tax expense to be reported in each quarter. So in this case, first let us do as per the information given. So what is the accounting income? Total accounting income is how much? It is 900 into 4, that is 3600. From this, will minus tax losses. Tax losses given how much? 600. So this become taxable income. Taxable income is how much? 3000. So on this we calculate current tax at a rate of what? At a rate of how much? 40%. Now current tax at a rate of 40%. Current tax at a rate of how much? 40%. So 40% is coming how much? 1200. Correct? Yes, sir. Now deferred tax, because can you say last year DTA was not created, so this year DTA will not be, deferred tax asset will not be reversed, and there is no taxable or deductible temporary difference given in the question. So deferred tax will be nil. So what will be the total tax expense? Total tax expense is 1200. Understood? Now effective tax rate will be equal to 1200 divided by accounting income, that is 3600 into 100, that is coming how much? 1200 divided by 3600, that is 33.33%. This become the answer for this particular question when DTA was not created in the last year. Understood? Now let us change the question. Suppose DTA was created, then what you would have done? So once again, if the DTA was created, accounting income become 3600 minus tax losses, how much? That is how much? Tax loss is how much? It is 600. So this become 3000. Now current tax at a rate of 40%, how much? 1200. And can I say deferred tax asset which was created last year will be reversing current year? Will be reversing current year. So deferred tax asset which is reverse, that become deferred tax expense. So deferred tax expense will be how much on 600 into 40%? How much? 600 into 40%, that is how much? 240. Total become how much? Plus 1200, that is 1440. So this become total tax expense. Now effective tax rate will be how much? 1440 divided by 3600 into 100. How much it is coming? That is, you can say 40%. So same is coming, because can you see we are applying matching concept. So here applicable tax rate become effective tax rate, and therefore this type of question they are not asking, because if you will use your applicable tax rate, then the student will do correct only. So to give some what good question, they are saying that DT of last year means tax losses of the last year, on that DTA was not recognized, and therefore effective tax rate will be different from what? Different from applicable tax rate. Now have you understood, Kirti? Your doubt is over or not? Bolo. Yes sir, I think your doubt will be over. Come to another question. Stock market. In marathon for CFS you have shown format where you are including working note number 2 for AOP. Unlike before, you merge it with Sona, just confused regarding the dividend paid treatment by subsidiary company in various scenario. Now just try to understand, means dividend paid, what I am doing, I will just inform you. Please, I am doing AOP and Sona now, because normally I have seen that ICAI is also using AOP. So I am also doing, however you can use Sona also. Even though you are making only Sona, it will not affect your solution, and your answer will be correct. But if you want to learn AOP, correct now. So AOP right now I have said कि suppose there is a retained earning. मेरी बात समझना. So I will write on closing balance, and then we write on opening balance. So this will be profit after dividend. Profit after dividend. In this we'll add any final dividend paid. So final dividend paid will be added. So this will become profit for the year. This will become profit for the year. This will be allocated to pre and post acquisition period. Pre and post acquisition period. This much you understood? Correct? This though I hope you have understood. Now after this I am preparing Sona. So in this you are adding date of acquisition, date of consolidation, and post. Correct. Now we are adding equity share capital. Opening balance and closing balance normally remain same. Then we write down retained earning. In retained earning we write down opening balance plus pre-acquisition profit, and here we write down post-acquisition profit, and this will be the total. This you have understood. In that Sona which I used to follow previously, their time adjustment or allocation we used to do in Sona only. This I hope you have understood. Stock market. Batao. Stock market, have you understood this? So opening balance plus P means this opening balance plus pre will be added, will be written in date of acquisition. This post will be written in post column. Correct. Now just try to understand. After this, I have made some changes as per presentation only. Now previously what I used to do, I used to do minus final dividend paid. Final dividend paid from post acquisition period. Correct. Now means if I am deducting final dividend paid because it was paid after acquisition, so it will decrease the net asset after acquisition. Therefore, whatever dividend you have paid, that will be deducted from what post acquisition period. So this profit is the profit after dividend, post acquisition profit after dividend. Correct. Now, so now what I am doing, just try to understand. Previously I used to allocate this. I used to allocate this in parent company and NCI. Now what I am doing, I am not deducting final dividend from this. I am allocating this in parent company and NCI, and in other equity working note I am writing minus dividend received separately. So effect will remain same na. Effect will remain same. Means first transfer profit before dividend and then minus dividend received in the other equity working note only. Ultimately the effect remains same. Ultimately the effect remain same. Having the stock market. Now this point means either you can directly transfer profit after dividend to other equity working note, or you transfer first profit before dividend and then minus dividend in that working note. Ultimately the net effect remain same. Have you understood stock market now? Bolo. You want me to take one example? I think example is not required if you have understood this. Bol rahe. Chalo. Let me take another scenario. Stock market. Siva Reddy. Sir, please upload solution of case study MCQ 29. Case study MCQ 29 question. Case study MCQ 29 question. I am requesting you. Case study 29. I have given 28 case study or 29 case study. I don't remember. I will do. I am uploading one by one. Till now I have uploaded 8 case study. So I will upload all the case study. Correct. So don't worry about that. I will upload one by one each case study. Correct. Okay. Then Manikanta once again. As per India 16 in the pre-production loss. Pre-production loss or cost incurred while testing phase to make PP intended use. Then what is the accounting, sir? Whether we will capitalize or transfer to PL. If PL, why sir? What is your question? As per India 16 pre-production cost or cost incurred while testing phase. Cost incurred while testing phase. Testing period costing will be capitalized. Any testing cost. Testing of what? Testing of PP or testing of production? I think you are not able to understand. When we are doing testing, whether the plant and machinery or whatever PP you have purchased, that is working efficiently or not, that is testing of PP. Testing of production is something different. Testing of PP is something different. Understood? If you are testing a production process, that is something different. Correct. That become your pre-operative cost. The pre-operating cost will not be capitalized. Correct now. Understood? Are you able to understand? So if you are testing your plant and machinery, that will be capitalized. Understood this point? Manikanta, whether your doubt is over or not. Also, sir, please guide on how to prepare for analysis of financial statement. How much time to devote? Just try to understand the analysis of financial statement does not require any preparation. There are some case study based questions in analysis of financial statement. They have given some case study based question that is based on what? Some respective Indias. If you have done all the Indias, you can answer all the question. I will say just read the case study and read the solution how to write down. So in analysis of financial statement, writing is important. How to write down, that you need to understand. Already I have discussed how to write down case study based question of analysis chapter. Correct now. In this first you write down which India's number title. Then you should write down initial recognition, subsequent recognition and measurement principle. Before that you should write down also meaning and recognition criteria. Then you should write down what is the wrong accounting treatment done, then correct accounting treatment done, then extract of financial statement and then working note supported for that extract. This much if you want to you need to write down. If you have written this much, they will give marks for analysis, correct? If they have given balance sheet and SOPL question with some misstatement, so they will give some misstatement in balance sheet and SOPL. You need to correct it. That is also based on what? India's requirement and Schedule 3 requirement. So Schedule 3 requirement you need to understand for that. But till now they have asked only one time, very initially, one time one question regarding this. After that they have not asked any question on this, because they are asking a question from this, so it will be of 14 marks, and 14 marks question they are asking from this, so they can't ask from consolidation, business combination and financial instrument chapter. Therefore scope is very less, I will say. But you don't know ICAI, anytime they can ask this type of question, so you need to prepare. I will say just do all the question, question is going to come from there only. Don't do any other question. Whatever question given, उसी से एक question आएगा एग्जाम में, समझे? Yes sir. Once can you show this way I have done? Kirti, no sir. Okay sir, if the target are not achieved as planned, how to deal sir? देखो, just try to understand target. Why we make target? We make target to be actually effective. मेरी बात समझना. To be effective, it does not mean then when you make a target it may be achieved. Just for example, today I have made one target that today I will record 10 case study. So this was my target. If I will not make target, now I will not record only. So I have done one target. Today I should record 10 case study, but out of 10 I have recorded only, I will say, 6 case study. So I have done something now. I have achieved something. That is important. So what you are doing, that is important. Correct now. If you are just making target and doing nothing, then that is waste. So my question is that how much you have achieved? If you have achieved 70%, 80% of your target, okay na, chalega. Someday you are not able to achieve, but dire, when the time will come near, you definitely your efficiency will increase. And I think it does not happen every day. So if targets are not achieved, I will say thoda sa be focused, because now exam is coming nearby. But if you are achieving your 80%, 90%, okay, nothing to worry. Sometime one chapter out of 5 chapter you are able to do only 4 chapter. So one chapter whatever you have not done, that you need to do thoda sa quickly, or any simple chapter do on quick basis. For example, A category, B category, C category. Now you have less time for C category. Just C category do on random basis, because C category are those chapter I have already informed you that if you know the content you can write down in exam. Do only some small or expected question whatever I have given, then also you can write down in exam. But A category you do and practice also. Yes sir. Correct. Manikanta, in question they said operating losses before commercial production. In question, operating losses means what? Operating losses is something different. Testing cost is something different. Operating losses means what? You have started, just try to understand, the plant was ready. Now can you say, once we have, suppose I have one studio, I'll just take my example. Here I have designed this, I have just designed my studio for recording purpose. For the first time I am doing recording for selling the recorded classes. You only say, Abhi, right now we have done so much investment in my studio, suppose 5 lakh investment done, so that has been capitalized. Once it is ready for use, you only say for initial period whether I will earn profit. Can I say to make it a profit venture, it will take some time. So that is known as initial operating losses. Initial operating losses means once the asset is ready for use, it might not be used for the full capacity. It might not be used for the entire capacity. So you might be incurring some losses during your initial period. That is known as initial operating losses. That will never be capitalized. Testing cost has been incurred before the asset is ready for use, so that will be capitalized. Understood? Have you understood what that means related to PP or something else? How we will assume, sir? I hope now you have understood, Manikanta, whether your doubt is over or not. So initial operating loss will never be capitalized. Testing cost, correct. Now or means testing cost means for testing whether it is efficiently working or not. And just try to understand, the testing period is given by the vendor. If the testing period you are not satisfied with the plant and equipment, you can return the asset. Suppose you are doing testing and you can't return the asset, it means it is not testing period. The testing period means you are just doing some trial run to to make sure that whatever you have purchased, that is working efficiently. If it is not working efficiently, you can return the product to the vendor. Understood? Have you understood, Manikanta? Yes, sir. Any more doubt? Batao. I hope today though I have done all the doubts. You means only small doubts you are asking. Chalega. Today the less number of students also. I think I have not informed you on prior basis, because of that reason there are less number of students today. Okay. Chalo. Today this much only. We'll meet again tomorrow with the one more live doubt session. I hope if other students will also listen this particular live doubt session, so they will be also helpful with that, because doubt remain common. You know, doubt is always common. Correct? Abhi, at this point of time, I will only suggest you that focus on your study. Don't focus what you are not able to achieve. Just try to understand how much you can achieve in the remaining period. Correct? Now, even though you are not able to achieve the target in a particular day, now just find out that can you achieve that particular point in the next period. Abhi, just think about doing maximum thing revise. Correct? Now, we in CA there is nothing to become perfect. Only 50% is required to pass the examination. Only you need to be self-confident. Whatever question is going to come in that exam hall, because you have studied all the chapter previously also, one chapter you are not able to revise, then also you know the concept and you can recall everything on exam hall and you can write down everything. Correct? Now, so that much belief you should have with yourself. Self belief you should have. Correct? Now, trust yourself, have faith on yourself, have belief in yourself, and of course you are going to become CA definitely in this attempt. But if you panic, what will happen? You will waste most of your time. That will be a dangerous situation. I hope you have understood. All the best for your preparation. We'll meet soon in the next video, in the next live doubt session. Till then, bye bye, take care. I think today this much only. Can I take a leave if you permit me? Yes, sir. All the best.